A few videos ago, I told you I was starting a 50K prop challenge with Blue Guardian. It's been 2.5 weeks since I took my first trade and wanted to give you an update. I've seen others post videos where they pass a challenge in 1 or 2 trades. It's certainly entertaining to watch and I'm happy for them. But from an educational standpoint, I'm not sure how much there is to learn from those strategies, other than sometimes it pays to be risky. I think a common way of thinking for most people is person 1 passed the challenge, so he must be a good trader. But person 2 failed the challenge, so he's a bad trader. I'd encourage you to look past the results and really focus on the mindset and psychology being offered. One of my favorite traders goes by the name of The Imperfect Trader. I'll post a link to his channel if you want to check him out. He documented his prop challenge over the course of a couple months. What I hope you take away is not only designing a trading plan, but how to stick to it. I said I was only going to risk 0.5% or less. Am I sticking with that, or did I take a 2% loss? What's my thought process when my stop loss barely gets hit and turns around and I miss out on a massive winner? How about when I'm up a lot of money, but price starts to turn around? My profit is getting smaller, but I haven't gotten an exit signal yet. Do I panic and cut the trade short, or do I stick to my guns and let my edge play out? Let's jump over to MT4 and see where I'm at. Between my closed trades and open profit, my equity is essentially at break even, sitting at $50,049. I said I would risk at most 0.5%, which is $250. Let's jump over to the account tab and see if I kept true to that. 4 trades hit my full stop loss. If you notice in the top left, I'm using the expert advisor called Lot by Risk. When you're getting ready to take a trade, you don't want to waste time or make a sizing mistake. It's a free tool that can help you out. I made a video how to use it. I've mostly been focusing on the 4-hour time frame, but I'm mixing in some 1-hour entries as well. Instead of risking 0.5%, I've decided to only risk 0.25% on the 1-hour trades. So all of these I took a full loss, but it was only at half the size. All the rest of these small losses, the moving average was able to get me out early. In my original backtesting video, I stressed the importance of realistic expectations. Historically, the strategy has only a 28% win rate. I'm actually expecting to lose most of my trades, but winning percentage is only half the story. The other big piece is how much I win when I'm right and how much I lose when I'm wrong. During the backtest, I averaged negative 0.8R on the losers, but the winners more than made up for it. Now let's look at how I've done so far in the challenge. The overwhelming majority of my trades have lost money, and yet you saw my account is still break even. How is that possible? My average loss is only negative 0.56R, but my winners are running at 2.5R. One win covers several losses. That's why it's important to let the trade play out. Let's take a look at a few individual trades. I took a short that was almost a huge winner that didn't quite work out. This could have easily caused someone to revenge trade or go on tilt. I'll show you what I mean. Here on CAD CHF, I risked 0.5% and I lost. Dragging it onto the chart, let's take a look at the entry and exit. My stop was 125 or 12.5 pips. It's not an unreasonable place to put it. Recent high was about 10 pips away. If I wanted to put it above the swing high, my stop loss would have doubled. Price takes me out, and look at what happened right after. Essentially, I got out at the very top. After I got stopped, price is currently about 90 pips below. Instead of taking a loss, I'd be up about 7-1 and almost halfway to passing phase 1. My risk is set at a constant percentage. No matter if my stop is 10 pips or 100, max I'm willing to lose is 0.5%. For the sake of argument, if my stop is 20 pips away, I trade one lot. If I want to use a 40 pip stop, I'm only allowing myself to trade 0.5 lots. It's true that a larger stop can be the difference between a win and a loss. But as you know, sometimes the trade moves right in your favor, and you didn't need such a big stop at all. Here on the left, our stop loss is below the most recent low. When we're wrong, we lose $250, but when we hit our take profit, we make $1,000. On the right, we want to be safer and put our stop loss below the swing low. We're still risking the same $250, but if price goes up to the same level, we only make $500 instead of the $1,000. In order for the bigger stop to be worth it, you have to be right twice as often compared to the tighter stop, and a lot of time it's not worth the extra insurance. The point of a backtest is to say over the long run, a certain size stop loss is more likely to yield a higher profit overall. If you lose sight of the bigger picture, it's easy to become irrational and reactive. I just barely got taken out, and the pain of the loss may still be in the back of my mind. The wrong question to ask myself is, what could I have done to avoid that situation? Well, if I had waited until the candle closed, I could have put my stop above the wick of that candle. It never would have gotten hit, and I could have rode it all the way down to the bottom. It's a mistake to be so quick to change my entire strategy based on only one or two trades. Let's take a look at another trade, and you'll see why. Here's a short I took on AU. My stop loss was hit, and I was automatically taken out for a 30 pip loss. Instead, let's pretend I decided to only use a mental stop loss. At the close of the candle, I get an alert, but by then it's too late. I would have lost almost 3 times what I planned. If I've said it once, I'll end up saying it 100 times because it's that important. Stop losses must be market orders at the time you enter your position. Having a mental stop loss or moving it farther away is the easiest way to go broke. We just saw a couple losing trades. Now let's take a look at a couple ones that are still running in profit. I opened this EJ trade about 2 weeks ago. Here we have a valid bounce trade. Price dipped down, bounced up. I added on to the position a few days later, and for about a week and a half, I didn't touch it. It recently closed below Kijinsen, so I moved my stop loss up. From a purely mechanical perspective, it's an easy system to follow. We get long and we don't have to do anything until we get an alert that price is below the moving average. And yet, how many times do you love to stare at the open profit moving up and down? Look at the action. Price has been steadily moving up. Every once in a while, we get a red candle, but it's immediately followed by a move higher. How would you feel when it seems the pattern may be broken? We get 2 red candles in a row. EJ is looking a bit weaker, and then we move another 100 pips to the downside. At this point, we're up 247 pips, but the trade at one point was in profit 440. How would you feel if you just lost 200 pips of open profit and your trade equity was cut in half? Same story for the second position. I'm up 164 pips, but down over 50% from 357. It's easy to kick or second guess yourself. Maybe on an individual trade, the execution and trade management might not be optimal, but going rogue and improvising, who's to say that I'll actually make more money in the long run? What if price continues up for another 500 pips? How would you feel closing the trade early against your rules? The other trade I've been in for a while is EuroCAD. I'm up about 200 pips, but I haven't touched my stop loss. It's possible one large candle can wick down and I'd be negative $1,000 in equity. This way isn't the only way to trade, and I understand that some people might not be comfortable trading like this. If you'd like to lock in some profits and move your stop loss, check out my trailing profit video where I give you a few ideas how to do it. My experience so far with Blue Guardian has been great. Support has been responsive when I've had a question. As you've seen from my fills, my losses have been capped at 0.5%, so slippage hasn't been an issue. One of their best features is the Guardian Protector. I have a max daily drawdown of 4% allowed. What I've done is go into my dashboard and set my max daily loss to 3%. If this is ever hit, Blue Guardian will automatically close out all my trades. It's a set and forget about it. I leave it turned on and it gives me peace of mind. Check out the link in the description below to learn more about Blue Guardian. As far as the challenge results up to this point, I'm okay with how things are going. My risk management is on point. If I see a bounce, I take it, and I don't do anything until I get an exit signal. With trading, there are plenty of things to get upset or distracted by. Just remember, you cannot control price. You can only control yourself. So many people are eager to get funding. They buy a challenge without doing the hard work. Watching a video of mine or someone else's is not enough. I've given you a blueprint. You can follow it to the letter, and you'll have a reasonably high chance of success. But don't take my word for it. Backtest it yourself to make sure you understand how all the parts fit together. And more importantly, make sure it works with your personality. Are you okay losing 2/3 of your trades? Can you actually cut your losers short and let your winners run? As for this challenge, I've already made up my mind. I'm going to stick to my system. I've burned my bridges and I'm sailing ahead. If I pass, I'll do the exact same thing in phase 2. If the big winners don't come, I'll go down with the ship. My message to you in this series is don't let one challenge define who you are as a trader or as a person. I have a couple videos that can help you develop this mindset. Click here to check them out. Thanks for watching, and I'll talk to you soon.